Hi, welcome to the Market Alert for Wednesday, the 29th of January 2020. So yesterday, as no surprise to anybody that follows the Market Alert, stocks saw to best day in 4 months apparently, as the devil virus count spikes. So much for the coronavirus now impacting the financial markets. As I've said, they've had their correction and it's now time to get the market back to the all-time highs. It wasn't plain sailing, which we'll see in a moment when we look at the 5-minute chart. But you can see the recovery during yesterday with the buying, the short squeeze that was put in place. And also you can see how these lines all connect here as well down to the 50-bar moving average. So the Monday's buying pressure certainly helped the market. But as I say, in the pre-market session for yesterday, I'm just going to drag this across so you can have a look at this. The market moved to the downside sharply, traded below the 200 MA but found support at the DP level. Did have a bit of a shakeout to the downside before we see the buying coming in at these levels with the green bars there, and then once prices had driven through the DP level, we saw the market retrace significantly in the pre-market. I think it's about 50% or 62% on. Let's just have a look. It's don't think it's going to be 76, but you never know. It is 76%. So the market retraced 76% off the morning's high down to the low before prices found support, and then in the start of the cash market, see prices trade down to the DP level, and from there it's just a matter of moving the market to the upside. Once we drove through the 200 MA, it was all the way back to the previous day's high, which would make sense. You've got a straight reversal there then, and that's what the market did. And we can see this in the daily chart there. This is your straight reversal market just above there. And overnight prices bouncing again as they came down towards the DP level. A bit of a big bar there, 50-point bar. And prices showing a bit of indecision at the moment as they trade sideways to lower. So I'll keep an eye on the 200 MA and also the DP level, just in case we get another shakeout. And the reason I say that, we've got the Fed tonight. That's the main event. Just get rid of these. Watch the Fed. 175 is the current rate. It looks like it's going to remain unchanged. Could force the market to be quiet in the cash market later on today. Meanwhile, the implied volatility pulls back to 14 during yesterday, which is no surprise. That said, prices remain below the 20-bar moving average, which is what we've just looked at here in the daily chart. You can see this is your 20-bar moving average. So we've got red in the implied still, even though it's pulling back to 14, but above the average line there and below at the top. Meanwhile, in Bitcoin, this is starting to make a move. In the daily chart, prices have driven through the 200 MA. Very high volume as well yesterday, above 9,000 as well, and seems to be holding. Most of the heavy work and the heavy lifting was done on the overnight, unfortunately, but we did have some reasonable moves yesterday in the 15-minute chart. We do seem to be seeing a bit more activity in this market, which is great. So we're nowhere near back to 50% of the biggest move the market's made, or the all-time high, which was 20,000, heading towards 50%. So there's a lot in this market yet. But I say most of the work was done overnight with this bar moving $250 in one hit that we can see there. Okay, let's see how things pan out today with regards to the Dow. It is the FOMC. Like I say, it could be quiet in the cash market as it waits to see if there's a surprise announcement from the Fed. Who knows? you don't know these days. But we know one thing, and that's they're going to do their best to get the market back to the all-time highs and keep it there. And with that, I will conclude. Thanks for watching. See you in the next one.